Hi everyone, we are from Group 28 of WLF 104 Digital Financial Literacy. Today, we are going to present the financial reports of our business, Mikasi Pizza Shop. There are 5 members in our group, which are Lo Wei Mian, Xia Jin Hong, Lim Ziqi, Tan Chia Xian, dan Lam Rui Huang. Mikasi Pizza Shop is a vibrant and community-oriented pizza shop that established in 2023 with the goal of providing an authentic flavor of Italy. The founder is Mr. Ong Kai Meng, which started this business in Klang, Selangor. Mikasi was gathering a group of passionate food lovers with over 10 years of expertise skills. For Mikasi, the consumer satisfaction is the priority. Besides, our vision is to be the community's top pizza destination, recognized for our outstanding quality and innovative flavor. Our mission is to delight our customer with delicious, handcrafted pizza prepared from the freshest ingredient, all while offering a welcome, enjoying experience.
This figure shows the gross profit margin of Mikasi Pizza Shop. The gross profit margin for Mikasi Pizza Shop is in excellent condition because the gross profit margin is above 25%. This ratio shows that the Mikasi Pizza Shop has made a good use for the assets to gain profits. The gross profit margin obtained is 66%. This means the assets are used efficiently in making profit. The company needs to maintain this level of gross profit by maintaining the selling price of goods and services and reducing the price of direct costs or the cost of the raw materials. Next, this figure shows the business analysis of Mikasi Pizza Shop. The diagnostic shows that Mikasi Pizza Shop has a good future in this business and can gain more gross profit margin in the next 2 years. For year 2025, the margin will rise to 35.71% compared to year 2024. In 2025, the gross profit obtained will be 57,500 ringgit and it will increase 7,500 ringgit compared to year 2024. The margin will continue to rise for 2026, but lower than 2024, that is 32.54%. This is because the company predicted that the sales for 2026 will drop a little. Nevertheless, the margin is still at the best performance overall. Based on the highlights of the projected financial statements of the Mikasi Pizza Shop, the financial data of sales records 10,400 ringgit indicates the sales of pizza in good performances. The reason for this shop's performance is the total profit earned is 2,910 ringgit, which shows a good improvement of the shop. It clearly shows that the shop's profit is a good indicator. According to the sales forecast for year 2024, the sales was 140,000 ringgit. The highlight of this financial statement shows a good indicator. Besides, this shop expects that the sales will increase for 2025, which is the percentage for the sales will rise to 15%. So, the assumption for the Mikasi Pizza Shop sales in 2025 is 161,000 ringgit. Next, the expectation in the year of 2026 to decrease the sales to 144,900 ringgit on their profit in their business due to competition with other pizza shops.
Equity ratio are used to determine a company's ability to meet short-term debt obligation. The first one we calculate is the current ratio. For 2024, it stands at 6.2, showing an improvement from 4.236 in 2023, indicating increased ability to pay short-term debt. The second ratio is the quiet ratio. According to Mikasi Pizza Shop, for 2024, it is 1.17, up from 1.03 in 2023, further demonstrating improved short-term debt-paying capacity.
The profitability ratio is used to evaluate the profits and business health. In Mikasi Pizza Shop, we focus on gross profit margins, operating profit margins, net profit margin, return on asset, and return on equity. All these ratios shows that our company is healthy asset operating profit margins ratio. Operating profit margin ratio decreased 10% from in these 2 years. Our company might face several challenges because company is not good in generating profits from the business. The third financial ratio we look at is activities ratio. Activity ratios such as inventory turnover ratio, average collections periods, and total asset turnover. All these ratios show that Mikasi Pizza Shop can have high inventory turnover ratio, able to collect the account receivable in shorter times, and manage to turn asset into sales efficiently. The last financial management ratio we use is debt ratio and equity ratio. Debt ratio measures a company's ability to pay back the debt, and the debt ratio increased from year 2023 to year 2024. The equity ratio measures how well a company uses common stock equity in finance total liability. Our company has increasing equity ratio in year 2024.
Working capital shows how well we manage short-term financial health. As of 30 April, our working capital stands at 8,090 ringgit. Calculate as current asset minus current liability. This indicates our ability to meet the short-term obligation and fund operational needs efficiently. Profitability shows how much we earn after covering all costs. At the end of April 2023, our company made a net profit of 2,910 ringgit. This figure is derived from the total revenue minus total expense such as salary, utility, transportation, vendor and raw material. Our profitability metric underscore our fiscal discipline and operational effectiveness during this period.
The cash balance is calculated by cash inflow minus cash outflow, and the bank balance is calculated by bank inflow minus bank outflow. And the cash balance in the end of the month year 2023 is RM 7,890, and the bank balance is 2,700.
The first year sale value in 2023 for this business is 10,400. The sale forecast in the year 2024 is 140,000. Then we assume that the sale will rise around 15% in the year 2025, which is 161,000. For example, improvements in customer satisfaction and loyalty, expansion into new market can contribute to higher sale projection for Mikasi Pizza Shop. Next, the sale value of 2026 is predicted to fall around 10%, which will become 144,900. The prediction may be due to economic downturns, negative industry trends, or change in customer preference.
I am Lam Ho. I will discuss some of the key obstacles and limitations faced by the company. First is market competitions. As a small to medium-sized enterprise, getting up and acquiring customers is tough, especially when competing with larger businesses that has more resources. Another issue is the lack of scale. Unlike larger competitors, we struggle to achieve economies of scale, which results in higher production cost per unit. Also, our capacity for risk management is limited. The company has limited capacity for risk management, which is making them vulnerable to economic downturns, market fluctuations, and unexpected events. The impact of COVID-19 has been profound. The pandemic stripped possession power and sent many working small. Reduced income from spending has led to fewer monthly customers and decreased prepaid frequency from our existing customers. Expanding into new markets is another hazard. Limit access to markets, both domestic and international, is clouded due to our research constraints, lack of market knowledge, and regulatory barriers. Lastly is market strategy. We started with a basic menu and rely on customers' feedback to grow and expand. Social media platforms like Instagram, Facebook, and TikTok have been curious from regulatory feedback and engaging with our audience. There are some recommendations and conclusions. First, we need to keep a close eye on our financials by regularly testing our financial statement and key performance indicators or KPIs. We can explore areas need improvements and fix problems yearly. Next, we should diversify our revenue streams. This means exploring new opportunities like catering service, delivery service, and online ordering platforms to bring in more income. Investing in growth is also critical. With a strong financial foundation, we should invest in new equipment, technology, and expansion projects to increase our capacity and effectiveness. We must also manage our expense carefully. This means regularly review and negotiation contracts with supply, implementing cost-saving measures, and limiting operations to keep costs down. It is important to review our financial policies and procedures regularly. It ensures that scale leverage effective and in line with industry best practice, wrapping up scale compliance with regulations. We should enhance our market intelligence through partnerships and collaboration to overcome scaling status. Investing with regulatory body and industry association can also help us expand. Lastly, we need to invest in security technology and store risk management plans, improving our technology effectiveness will enhance our competitiveness and growth. In summary, maintaining a strong financial position requires ongoing efforts. Each action will enhance our effectiveness and rebuilding standing and scale from a sustainable future.
That's all for our group. Thank you.